All right, hello and welcome back. I'm going to go ahead and share my screen and get us rolling here. All right. So we're back with financial management and fundraising. Today we're excited to have two topics to cover. That should be lots of fun. Quick overview of our agenda. And then we'll get rolling here. Looks like it skipped down. Let me see if I can go back. Nope, hold on. Looks like it's not showing me, but we do have a slide here that for some reason, let's see. All right, well, I'm going to share this screen because I don't know why it's not showing some, it's not that we have them hidden, but it's not showing me slide 6 for some reason. Let's see. Okay. Ooh. Okay, let's start with that one. So we wanted to get rolling and doing a quick wraparound, discuss the wraparound emails with you all and the things that are included in there. It's a great way for you to kind of get access to all of the tools that we share and thinking about what we've covered in the last session. And also what's included in your wraparound in the extranet folder is our member benefits. We do link up certain member benefits that link to each topic area. So you'll find that in there. It's a beautiful PDF that our membership team put together. And it's a great way for you to kind of stay in tune with all of that. We also wanted to mention, go back to a little bit of strategic planning and talk about our SMART goals. And let's see if it'll let me go to that slide. For some reason, it is skipping over these slides. All right, well, let me try to share this screen with you. Okay, didn't want to do that. Let's see. Okay, let me bring this over here and see if I can show you this. All right, there we go. So this is our, why would it be doing that? As you can see, I don't have Leslie with me, so it's just going to a blank screen. All right, so to get through these slides that is not showing in the presenter mode, I'm just going to share with you some of the member benefits for strategic planning, which is what we covered last time. Certainly we have pro bono consults and center services around those things, those items, if you need some help with those. The coaching consultation is up to 5 hours, can help with some strategic planning items, helping you as a nonprofit leader to kind of plan out any transitions, that sort of thing. In terms of money saving partnerships, we do have our Tech Impact partnership, and center members save 20% on all the Tech Impacts online seminars, which you can find there on our website under Money Saving Partners. And then we do include a bunch of publications and access to different tools and resources that are found in Info Central that are in line with some of the strategic planning. So it's additional goals that you can see and view and learn more about that way. So we did want to just jump in to a little bit about SMART goals and SMART-T goals. And there's been different iterations, but they went from SMART to SMARTer to SMART-T. And as you'll see here, you've got your normal SMART goals here, which are specific, measurable, ambitious, relevant, and aligned, and time-bound. And then they added some additional goals here that you'll see: evaluate and recognize and reward here. And this is just to give a sense of adding in some metrics and ways that you're measuring success, but also taking time to recognize effort and collaboration and reward any significant achievements. And we find that this is really important to do, right? I know the center is working on a new website right now. And so we're hoping to celebrate all the little milestones along the way. When we reach a certain goal or we're moving into the next phase towards launch, it's really a way for us to sort of track progress and be able to honor the work that's going in and everyone's help along the way. And then you sort of see an iteration of SMART T goals, and you've still got your SMART, but you also have inclusive and equitable. And we have an example here of an equity forward approach to goal setting. So does somebody want to go off mute and read these two goals here? You can see the SMART goal and the SMART T goal. I can make it a little bigger too. Don't be shy. No one wants to hear my voice that long.
Hi, good morning. So for the SMART goal, expand youth mentorship program into 3 new counties by the end of June. The SMART T goal, expand youth mentorship program into 3 new counties by the end of June with volunteer task forces that are representative of the community by age, gender, race, and other characteristics advising the expansion.
Yep. So you see there, they've taken that goal and they've expanded upon it and added inclusive and equitable elements that they can then track, right? And so that's something that we encourage you all to do, is to think about how you can expand your goals, how you can make them smarter, how you can make them smarty, how you can make them smarter-y, right? You can add all those things in there. It's a great way to really amp up your strategic planning and your goals around those things. All right, so I'm going to go take a moment to just go over the agenda real quick. We've obviously done our review and reflection of strategic planning. And feel free to add any notes in the chat if you've had some ahas since our last session about strategic planning or anything you'd like to add. Feel free to pop that up into the chat. I actually need to pull my chat up so I can read and see if anybody's leaving any comments there. And then we'll have time for some participant introductions. And then we'll dive into financial management with Tracy, who's with us. We'll cover a bunch of information. I'll have lots of slides to share, including a PDF of all those links that we'll be sharing. And then you'll see we'll move into fundraising. We'll cover fundraising stages, donor communication, fundraising programs, fund development strategies, funding development of human resources. We'll have a quick session evaluation reminder, graduation prep, and our closing. So I'm going to move into our, let's see if it'll let me. I'm going to see if I can. Yeah, I do not know what's happening with our. Some slides are not coming through for some reason, so I'm really sorry, but you're going to have to see it this way. It's very strange. I'll have to talk to Leslie about that. But we wanted to have a moment to have you all use the annotate feature to go ahead and you'll find it up in your top bar if you can pull down into this slide here, and would like to have you all use your stamp function as you did in the past. Show us where you're located and share in the chat one thing that your county is known for as we get rolling today. Oh, good, it's working. Good, thank you. Anything that your county is particularly known for that you'd like to share? We always learn some really interesting things about this getting to know you icebreaker.
Talbot County is known for our furniture.
That's right.
Talbot County, I saw that, Rebecca.
Yep.
In the chat.
Thanks for sharing, Alex.
Sometimes that annotate feature gets away from us. So
I see that, yeah.
Moore County is known for the golf Wait a minute, it went quick. Let me get back up here.
Sorry about my
Uh,
line.
Moore County is known for the golf and the US Open coming here in June. Nash is known for barbecue. The capital, I'm thinking that's Wake County. Orange County, UNC Chapel Hill. So we see learning a lot about the state. Guilford County is known for the birthplace of the civil rights movement. And I'm just trying to keep up. Cumberland County is known for Fort Liberty, home of, I gotta move my screen up, home of airborne and special operations. I see another, the capital. Let's see, trying to keep up here. Beaufort County, Pamlico River, Mecklenburg is known for professional sports, NBA and NFL, Cumberland County military, Dare County, Wright Brothers, Lost Colony, Pirates, Wild Horses, Seafood, Freedmen's Colony. Thank you all for sharing. And then if we just take a look at this map in terms of kind of where we see annotations, Cataract County is known for beaches. We are from east to west, north to south. We are got some good representation here.
Mhm.
Good.
That's great.
And if there's anyone who, would like to come off mute and comment about your county, that's okay too. If you want to lift something up today related to where you are. I'm in Guilford County. And so thank you for the person who put in the chat about Guilford County. Let's see, I see a couple of more things kind of popping up in there. Henderson County, known for apples. Robeson County is known for its poverty, yet, sadly, yes.
Yeah.
And as a matter of fact, if you look at across all of the counties, the 100 counties, I do believe 80% of our state is rural. So 80 of those counties are rural counties. If you watch the news, especially as of late, there's quite a bit happening around affordable housing, rebuilding housing, especially in some of the more rural communities in our state. And so let's see, what else? I recently discovered grape ice cream from Robeson County. Grape ice cream. Okay. Alamance County has a preserved Civil War battleground, which is national landmark. Forsyth County River Run Film Festival. Okay. And again, just giving a couple more minutes to, we can go to the gallery view, Rebecca. A couple of more minutes for anything that anyone wants to lift up from as it relates to your county. Auto racing, Cabarrus County. Learn a lot. We always learn a lot about the state when we pose this question. My favorite treat, especially at the powwow, is that the ice cream? I mean, is that the grape? Oh, okay. All right. Great. I see smiles. Yay. I know it's still morning. I'm on cup of coffee number 3, so I'm rocking and rolling today. I typically just have 2, but I'm on the 3rd cup. Not sure why I did that, but I did. And so good morning to you, Rebecca. I'll share with you our agenda today. As I said before, it's good to see you. And thank you for continuing to share in the chat what your community or what your county is known for. We have 2 topics for today. And so we are going to be rocking and rolling. We're going to start off with financial management, and we're going to conclude with fundraising. Of course, we'll take some significant breaks. We're going to do some breakouts. We're going to do some hands-on work. We have a professional guest with us today, our CFO at the North Carolina Center for Nonprofits. And so we will be hearing from her today as we all kind of tag team to bring this information to you. Let me just talk a little bit about the cadence today. When we get started on our topic, we will put a document in the chat. And in that document, it has several links. And each of those links align with the work that we will be doing specifically related to financial management. And so we're going to pop that in the chat as soon as we can here in just a minute. Make sure that everyone has access. So the way this particular session is designed is that we walk through some salient aspects of financial management. And then we have provided examples, which are links specifically to documents that help us to kind of illuminate and highlight some key pieces of information related to financial management. I think Rebecca just put that in the chat for us. And so if you would go ahead and open that up and just make sure that just click on the first link and just make sure that is working the way that it should. We've got a couple of things to do before we get to that, but we just want to make sure that is working. I see some heads nodding, so that's Rebecca, that's good. Because that's going to be real important as we move forward. So we are going to be referring to those documents. And what we did is we went out and we identified organizations that are in operation, and we're lifting up information that is posted on websites. So it's public information that we're using just to kind of highlight some salient aspects of financial management. As usual, we're going to be together today, Tuesday, for several hours together. And so I won't say relax, but I'll say get comfortable. Maybe that's a way to put it. And we're going to walk right through what we have planned for today. So as we go into financial management and fundraising, we paired these 2 areas of management for a nonprofit together because oftentimes what will happen is that on a day-to-day basis or on any given day, we sometimes operate in these 2 areas of management in silos. And really, financial management and fundraising really should be partnered and working together. And there should be some interfacing with those 2 functions. We start with financial management, recognizing that a significant part of many of our nonprofit organizations of funding is coming from fundraising, definitely coming from other strategies and other ways to bring in revenue. But the goal is to try to work towards securing unrestricted funds in our nonprofit organizations, so we have more flexibility in the way in which we expend those funds. And in particular, I believe it was Tina that brought up the fact that in her county, it's known for poverty. And we know that, as I mentioned before, 80% of the counties in our state have a significant challenge with overcoming poverty. And so we recognize that we do write grants, and grants are needed, and they have a place in the work that we do. And they're necessary. Some of our nonprofit organizations actually have contracts with either our local government in terms of city government and county. Some of our organizations have contracts with some of our state departments, for example, NCDHHS, contracts with many nonprofit organizations to deliver services and provide resources to individuals who live across the state. So we know that there are different ways in which we want to and should secure dollars. One of the goals for many nonprofits, as probably it should be, is to diversify where our dollars are coming from and to try to secure by way of fundraising unrestricted funds to do the work we do. Now, I say that quite easily, knowing that it's not that easy. It is challenging to do that. However, we encourage nonprofit organizations to seek that goal or to pursue that goal. So to get us started in terms of just thinking about a nonprofit organization and looking at the diversification of revenue, we want to show you an image. And once we show you this image, we would like for you to go into breakouts and discuss a particular question after looking at and seeing this image. So again, this idea around diversifying our revenue, looking at ways, Rebecca, can you go back for a second? I'm sorry.
Sure.
So looking at ways that we can bring dollars into our organization or into our nonprofit for the purpose of meeting our budget, being able to pay for all of the expenses that are needed in order for us to do the work that we have mission to do and that we have a vision and aspire to do. So that is important. And so again, a long-term goal for many of our nonprofit organizations, but putting into place short-term strategies to get there. Much of our government funding, in particular state funding, is being reduced. A lot of our United Way organizations are continuously cutting funds. And so the question then becomes, what is it that we can do to diversify where revenue is from? And then probably more importantly, how do we make decisions about scale of programs and services such that they align with the dollars that we're able to bring in the door? And so here is the question that I want you to write down. The question is, how does this image, once we share this image with you, how does this image represent a nonprofit with a diversified revenue stream? How does this image represent a nonprofit with a diversified revenue stream? And so we are going to place you in breakouts to have a discussion about this question. Rebecca is going to show the image, and I think you were going to provide the link too, just in case folks wanted to. Maybe not.
Yeah, I'll put that in the breakout chat so you guys
Okay.
have the link in there when you're in the sessions. But
Okay.
let me share my screen real quick.
And you can also take a picture with your camera on your phone if you want
Yeah.
to, this pops up on the screen. And you may have to move your video, you may have to move your, there we go.
Let me share screen.
Okay.
There we go. Is that
All right.
better?
Yeah, there we go.
Okay, good.
Thank you. Mhm.
It's still not letting me show full screen. It just goes to
You're
a
good.
black screen when I try to share. So you can see here
You're
the chart that we're looking at. And it will be on page 3 of this link that we put in the breakout session chat. You'll scroll down to page 3 and you'll see this, this pie chart.
So the question is, how does this image represent a nonprofit with a diversified revenue stream? And we're going to start to place you in breakouts. Make sure you can access the image, or make sure you could just take a quick picture if you'd like, and you can pull it up on your phone once you go into breakouts. Okay, we're gonna put you in breakout rooms.
And we'll be in for 10 minutes, is that right?
That's correct.
Okay.
Mhm.
All right. All right, look for that chat in the directions that I'll send out to the breakout room chat. And don't forget to introduce yourselves to one another. If Dr. Palmer didn't say that, we want you all to introduce yourselves to one another. And if at any point you have any questions or you get stumped or you have something you need to share with the main room, you can come back to the main room and just remember which room number you're in and we can put you back in. So don't feel like you're stranded there all on your own with your group. All right. You're off to the races.
All right, welcome back. So as you were having your discussions, and I know there's just a few more people that are still coming back in. As you were having your discussion, our hope is that different perspectives on kind of what you saw and what you understood to be presented in that pie chart. Hopefully that kind of warmed us up or kind of broke ice to kind of go into another kind of space with this image. And one of the things that I'm curious to hear from you is what's positive about what you see in this pie chart, just based on this whole idea of diversifying our revenue and managing our finances in a way. Uh-oh. Okay. That sounded like typing, but
It's okay. I muted. It's all good.
oh, good.
One thing we found was interesting, and thanks to Bethany, she's been associated with YMCA. I would have thought a bigger part of the pie chart would, and along with others, would have came from membership, but it was the complete opposite. A tiny, and she explained that to us and so forth, and explained some of the programs they have, and I just thought it would have been bigger.
Mm-hmm. Bethany, do you mind shedding a little bit of light on that? This is why
Yeah,
WCA, by the way.
yeah, and I recognize that after the fact, but I don't know how similar they are. But for the YMCA, the YMCA themselves, a lot of their funding, the majority of their funding comes during their campaign, that they do towards the end of the year. I believe it starts in the fall and ends like right somewhere in the middle of winter, I believe. But that's where they get, I mean, I think they said this past year it was like 78, 80% of their funding for the year. And so they do all of that, and then everything else comes through their programs. I mean, I know the United Way for this particular one made a deposit. I don't know a lot about the United Way, but the programs include like their before and after school care, their like the swim lessons. They've got basketball. They have a ton of programs, and one of the things that I think is the most amazing about, again, this is the YMCA, is the amount of scholarships that they offer to the children in local community families, even in local communities that that are in need, so that they can get tutoring, because tutoring is another thing that they offer, tutoring, and get that paid for before and after school care. Again, they even do things around Christmas to help people, put presents under the tree. So.
Thank you. And there was a comment in the chat about, in terms of, I'm thinking kind of what you see in this image, that 70% of, or was it the comment that Bethany made, that 70%, that was in the chat. Someone
Oh,
put
yeah.
that. Clarify that for me, what you put in the chat. 'Cause I want to respond to that.
So she
Tina.
just said, yeah, she just said that 70% comes from this one particular endeavor, for the group she was referencing. And I said 70% funding from a single source would really, really worry me. And that kind of goes back to what our group was discussing when we looked at that pie chart. So while the pie chart, like on the surface, looks, there's a lot of little slices in there. United Way was a significant chunk. Not knowing if that was earmarked or not, like if that was earmarked for operational, if that was earmarked for specific program, that pie chart, even though there was multiple revenue streams, didn't necessarily represent diversity in funding. It just represented that these were the significant measures. So to go back in and look at that and say, suppose the 27% from United Way, and as Kenton had mentioned, that's just an aggregate. So that is a bunch of individuals who've deposited money here, they've aggregated it and sent it back over. So that would actually represent further diversity if you would look at it as a micro versus a macro number. But coming back to the macro numbers, you can't tell if that's truly a really diversified budget. Because with that budget, once again, if one or two of those things were to not function properly, it could still shut down a program.
You guys, I have a quick question.
We have,
Lenise, oh,
Before,
I'm sorry, Tina.
because I have a really quick question. Can we bring it back up? I'm kind of visual. So,
Sure.
so while we
I
discuss it,
keep
I
looking
can
at
see. Thank you. I
Okay.
appreciate it.
And Tina, back, you were saying something else
Yeah,
there
I
at the
don't know.
end. Did you finish your thought? Okay. All
That's
right.
fine.
So I do want to comment as it relates to kind of what we've shared up to this point. One of the things about if their membership fees paid by customers, right? Let's just say, and 70% of your revenue is coming from the sell, SELL, of a product or service. There is some degree of risk because that is one sole source that we have where 70% of our dollars are coming. But that 70% is not coming from a grant, and it's not necessarily coming from a per se contract. And so that service or those products, that membership that the organization is selling, does give you an opportunity, to be able to tap into what we might say is unrestricted dollars. Because once that revenue comes in through membership, that organization is able to, if it's a YMCA, as Bethany shared, they are able to utilize those funds in ways that are unique to their needs, as opposed to, say, the United Way dollars that they may get or the private foundation dollars that they may get. Now, the kind of the rule of thumb, if you will, or the long-term goal is that we don't want more than we don't want more than a third, right, of the dollars that we need to come from one source. So
Right
what
there.
that equates to is that we want to look at about 3 to 4 different sources. So if there were something to happen as related to one of those sources, we would have an opportunity to maybe survive that loss, if there was a loss there. So that's definitely a goal that we encourage nonprofits to strive for. While at the same time, we recognize that it's very, very challenging. Rebecca, I saw a couple of comments in the chat, so I want to make sure we leave space for other comments that folks might have.
Can I just make a real quick statement just about that? And then there's no rebuttal or anything, just because like for Meals on Wheels, right? I want to do a pie chart to be able to visualize it, right? But like I can't even put a percentage on it, but the majority of our funding comes from one source, which is Triangle J, or Central Pines now. And that is like our food budget for the year. That is what covers our food budget for the year, for like our home delivered in our congregate. So I understand like the you know, you don't want the majority of your funding coming from one source, but we also try to match, or well, we exceed it with our fundraising, which our fundraising is going to be, you know, diverse and probably wouldn't be represented in this pie chart either. But like for as far as like program goes, that would represent our one source of funding, and it would probably be pretty close to the 50% of our funding. So I just wanted to throw that in there, and that does come through, it funnels through from something through the federal government. I can't think of the words right now.
Okay.
I am
No
only
worries.
this far through my coffee.
No worries. No worries at all. No worries.
Now-
So I understand that fear, but I mean, that's just our reality.
Understood. Understood. And you know, here is what we know to be true. Every nonprofit functions differently. Where we get our resources from is going to be different. There are some nonprofit organizations that have been around over 100 years, and 99% of their funding comes from grants. So what I want us to be clear about is that when we're able to secure more unrestricted dollars, we are able to make decisions more freely about how we expend those dollars. There's more than one way in which a nonprofit organization can grow and enhance and develop its financial portfolio. And we know that, but we also know that when we have that one primary source, we know that when there is a change in that funding opportunity, then it puts the organization in jeopardy of not being able to function. And so that is really the takeaway here. But we show this image just as an example to do just what we're doing, is to begin to get us to thinking about, well, how do we want to manage our finances and our fundraising? What kind of picture is it that we are striving for and that we're looking for? Tina, I saw your hand.
Yeah. This is related, but kind of aside, and we started discussing it in our chat room. And Dr. Palmer, I was hoping to get your feedback on this. So sometimes when I speak with other nonprofits, you know, we talk about financing and we talk about funds and these types of things. One of the things I always recommend, and tell me how you feel on this, is, and we started touching on this once again in the chat room, is that even for small and startup agencies, that you scrape off what you can. It doesn't matter if it's $200 into an investment account. And then with those people that you serve, and you let them know that you have like this investment account or this endowment account that you've begun. So when folks, maybe later on after you've served an aunt for X amount of years and they want to leave a little bit of money, they've got this account that they know that they can give a gift to, that will go into the long-term health of your agency. So even for new agencies that are very, very small, personally, I feel like it's very, very important. It's one of the things we did when I came on, and we have now had probably 12 or 13 folks who have passed away and their families have directly contributed to that. So where it started out as being not much of a thing, but it was something we could say we had. Over the time, you know, it kind of, it builds up, and I feel like it's a good long-term view. It maybe isn't so helpful for today, but assuming that you are running your agency with the intent of it being here in 10 years, it's, you know, it's kind of like when you start your kid off with life insurance at 16. You know, it's that long-term view.
Response to that would be, that's an option.
Okay.
You know, that's an option.
Fair.
You know, organizations approach this differently for a lot of different reasons. Lots of moving parts when we start to want to create a formula for getting us to whatever our financial goals are. And there are options out there for us to do that. I'm always quite cautious and mindful that every organization is different. And when I don't have all of the information, I move carefully and respond carefully about what might work for a particular organization. What you've described is an option for organizations to kind of lay out a path to enhance their finances. Can we go back to gallery if you don't mind, Rebecca? And we're gonna move on from this. Tina, you had another comment?
No.
Oh, okay. All right. So the other thing I want us to take into consideration about what you saw in the image is the individual dollars that were coming into that organization for that year. And notice we went back and got a dated image, but was 16%.
Mhm.
So the individual giving was 16%, which is where that fundraising, for the most part, those fundraising efforts would and could show up as a strategy moving forward for that particular organization in terms of long term. The other thing I want to point out about that image as well is that we don't know for sure because we don't have the narrative, right, for each of those areas of funding. But when you look at the corporate was 2%, government was 8%, United Way was 27%, and private foundations was 11%. Now, most of that is probably grants, and most of that is probably restricted. And so one of the strategies just on its face could be that we want to enhance the individual giving and have more unrestricted dollars coming in and maybe begin to kind of move away from being, I think that was 80 or 85% in the grants and contract space. So a lot of different ways to look at this. But the takeaway for us is as we go into learning more about managing our finances with our CFO, and I'm gonna here in just a minute. Rebecca's going to introduce Tracy to us, and then I promise we'll take a break, but we're going to get started in this before we do. We want to we wanted to set the stage with this as we began to learn more about managing our finances and learn more about fundraising. Again, those two management functions, there should be communication happening with who's handling the finances and who's trying to bring dollars in the door so that we are lining up. The other thing I would say too, and I said this earlier, oftentimes as nonprofit organizations, we want to try to do it all out of one nonprofit, right? We want to eliminate poverty. We want to impact homelessness. We want to do all these things. It's important for us to think about our programs and services to scale, right? That our one organization is contributing to addressing those areas and those things in our community. And so we're moving into financial management now. Rebecca, I'm going to pass it over to you, and then we're going to, Tracy, we're going to jump into just a couple of these kind of items here, and then we're going to take a break.
Great. All right, let me share my screen real quick and I'll get rolling. All right. All right, so just a quick introduction of Tracy Carriette. She is our Chief Financial Officer and Head of HR. She's responsible for the overall financial operations of the center, as well as audit and tax functions, budgeting, policies and procedures, and human resources. She wears lots of hats. And she's also helping a lot now with our website too. So she does a lot of our tech overview of our oversight of our tech here at the center. She's got tons of experience, but she began working here at the center as an intern while attending Meredith College, where she received a BA in mathematics and a minor in accounting. So she's been with the center for 20 plus years now, and she knows the ins and outs of everything. So we're delighted to have you with us, Tracy. Thanks for being here. She joins these sessions each time with us. So with that, I'm going to pass it back to you, Dr. Palmer, to go over this slide for financial management.
Awesome. Great. So our first set of work that we're going to do related to financial management is financial transactions, internal controls and audit, and diversification of revenue. financial transactions, internal controls and audit, and diversification of revenue. Also, Rebecca put in the chat a link to a document, and I'm hoping everyone was able to access that. That's going to be essential as we're walking through and doing our work today. So I want to make sure that everyone has access to that and that you kind of have that at your fingertips so that you can include that. You can utilize that. So as we go into financial management, our very first piece of information is financial transactions. And so in looking and studying financial transactions, it is important to keep in mind that many of our nonprofit organizations have guidelines related to how to manage our finances. Rebecca, you can go to the next slide. Have guidelines in terms of how to manage our finances. And also some nonprofits have policies and procedures manuals that give us specific instructions on how to manage and engage in the accounting and the bookkeeping and the record keeping, and even going so far as, I think Tina pointed this out earlier, going so far as to coming up with a strategy such that we build a reserves and or we establish an endowment, or we do some long-term planning around working towards financial solvency and sustainability of our nonprofit organization. And so the guidelines and the policies are unique to your nonprofit, a place that you can find some understanding of how we engage the board in managing our finances is found in our bylaws. So there is a section typically related to that. Also, it's very common for nonprofit organizations to have a finance committee that is a part of the board of directors and part of the board structure. And typically that finance committee is chaired by the treasurer of the board, and the staff person, in this case with the NC Center, it would be our CFO, Tracy. Also, that staff person works in alignment with and partnered with that committee and that chair of the finance committee. So there are those types of infrastructure elements that are put into place so that we have guidelines, so that we have policies, and so that we map out and lay out the duties and responsibilities of our board, i.e. our treasurer, possibly a finance committee, and also in some cases, the staff as well. And so that information is typically written and bound, if I could say, and it is typically understood in terms of how nonprofit organizations maneuver. Again, that could look different from nonprofit to nonprofit. I would say it is a good practice to have in writing the way in which your finances are managed and the duties and responsibilities of the players in that. That is important. We want to do somewhat of a deep dive into a couple of things. In terms of financial transactions, and in particular, revenue and expenses, understanding budgeting and what that looks like, understanding what some very common reporting is with nonprofit organizations. For example, a statement of financial position, a statement of activities, a statement of cash flows, a statement of functional expenses. We want to do some sharing of what that looks like, and Tracy is going to guide us through some salient aspects of those documents. In addition to the 990 IRS form, which is a document and an expectation of the IRS of our 501c3s. any annual reporting or impact reporting that takes place with your agency, and then also the audit and auditor's report, and a lifting up of the accepted accounting principles and where you might be able to find those. Whew. Now, I know that was a whole lot just for me to unpack in terms of kind of telling you what it is that we're going to take a look at. So that's what we have coming up. There's quite a bit involved in that. If you look at the document that Rebecca shared with you, all of those items are listed there, and there's some links there that we're going to be, one, you have access to them yourself, but we're also going to be populating those on the screen and walking you through that. We're going to take a break at this point, and then we're going to come back, and Tracy and I are going to kind of tag team and walk us through what we have here. Someone is asking for the link in the chat again, Rebecca. So if you could share that,
I'll
and
put
we
that in
can
there.
go. Yeah, I was gonna say we can go off and do the gallery view. It's 10:34. And so can we come back at 10:40? And I promise you, we'll get another break or two in, but if we could come back at 10:40, we've got quite a bit to share with you. Thank you. It's 10:34. We'll be back at 10:40. Quite a bit that we want to share with you. So we're going to jump right into the financial transactions. At the top of our list under that particular subtopic is revenue and expenses. And so one of the ways that we document and showcase our revenues and expenses is through a budget. And so typically the budget gives us a picture, or it lays out where dollars are coming from, or where we're hoping that they're going to come from. And then also what those expenses are. So there is in your workbook, we provided like a template for you that you can use, but we're actually going to show you. We're going to show you this filled in. And so Tracy, I am going to let you kind of go over and share. And we're utilizing the North Carolina Center for Nonprofits budget as a way to kind of showcase what this looks like.
Thanks, Dr. Palmer. Good morning, everyone. I'm happy to be with you all this morning. I've been listening in on your conversation so far. Just a little note, I'm caught a cold over the weekend, so I'm pushing through it. So I'm going to try not to cough in your ear through this part of it. Like Dr. Palmer said, we have a lot to get through, so we're going to kind of do it at a high level, but hopefully, get to share a lot of great information with you. As she mentioned, you have a couple of samples in the materials of budgets and a blank template to fill in, but we also thought it would be helpful to share with you some of the center's documents related to how we develop a budget and then how we track it throughout the year. So obviously, developing an annual budget for your organization is, as Dr. Palmer said, an important step in tracking your revenue and expenses. And remember that your budget is your plan for the year. It's your best estimate of what funds are going to come in and what will be spent during the year. And so you develop that with what you have in the moment, and it's the best estimate of what you all think is going to happen through the year. A good strategy, and one that the center uses when creating our annual budget, is to get all of the staff involved. It's not just your finance folks and your executive director. This helps create buy-in and ownership of the organization's finances at all levels. So within the center, we have our departments work closely together to develop what they need to run programs and services throughout the year. And then we funnel that into our organizational budget. And we've been doing this for a few years now, and I think it works really well. It also takes the guesswork out of me trying to anticipate what I think each program area is going to need, but rather they're letting me know what they need included in the budget, because things change year over year in terms of how they do things. So what Rebecca is showing on the screen here is an example of what the center gives to its finance committee and board of director prior to the end of the fiscal year to develop the budget for the upcoming fiscal year. And it's helpful to use in developing a budget, looking at your current year budget and year-to-date actuals, and the previous year's budget can all help in populating. We also look at trends and previous year's data to help inform. And again, we talk to our staff to understand needs for the coming year. Another thing that we do is that you could consider is providing staff with some pre-planning questions to help them think through their budget process for the year. So what are your equipment needs going to be for the year? What supplies and materials do you think you're going to need to run programs and provide services? So this budget includes a detail of revenue and expense. There's a lot of work behind the scenes that goes into developing this with a lot of other detailed spreadsheets about what makes up these totals here in the revenue. But you can see, like a lot of organizations, we have typical revenue around contributed revenue, which is foundation, corporate, and individual. We also left the breakout of our earned revenue and others. So you can see we have things like registration fees, royalties from some of our money saving programs. NC Nonprofit Careers is our job board where nonprofits can post openings, down to sales of publications. So we're doing, again, some legwork behind the scenes to try and estimate what this will be from the coming year. And having this previous year information is always helpful in doing that. Another piece that goes along with this that we send to our finance committee and our board are budget notes. We don't have those to show you, but it's just a narrative that details what's included in these line items, so that our board can read through and really fully understand what's going to be included in a budget that they're getting ready to approve. And if you look at the expenses, you can see the detail of our expenses here. Again, some pretty common ones within nonprofit organizations, equipment, mailing, office space, travel, and of course, salary, wages, and benefits for the organization. So these are typical. They may not be the same for every organization. You may have some different revenue and expense that you're tracking. You may get federal or state funding. You may get United Way funds like we saw with the group we were looking at earlier. But this is just a real life example to show you a little bit about the center's budgeting process. The other document we wanted to show, and Rebecca's going to click on this, that we share quarterly with our finance committee and with our board, is this year-to-date statement of activities, which is sometimes referred to as a profit and loss. And we'll talk about that statement in more detail later. But this is what's allowing us, once we've developed the budget, to track it throughout the year. So we can see, are we on track? Where are we maybe a little ahead? Where are we a little behind? So what's included here is our budget for the current fiscal year, year-to-date numbers again. So we're just seeing where we are throughout the fiscal year. The variance column is just a nice piece to add so that you can see easily some of the differences. It'll help you figure out, what do you have left to raise, for example, or where are you getting close to meeting a goal or hitting a maximum for your expenses. And then in this particular year, the center is also tracking any budget adjustments. So if, as I said, when you're developing this earlier in the year, you're doing it based on everything that you know at the time. And it doesn't always work out that way. So we tend to track big pieces that are impacting the budget throughout the year, whether it's revenue or expense. So it could be a new grant that you got in that you didn't know was coming until later in the year, or some additional expense that was unplanned for. So this helps us just keep an eye on it and see how it impacts the bottom line of our budget. And so by doing that, then we added the last column, which just helps us see what our new year-end number could be. Again, because if we can track this on the revenue side and understand our total revenue, and then also on the expense side, then we can see how these pieces will impact our bottom line for the year. So these are just a couple of the documents that the center uses in both developing and tracking our budget throughout the year. And I didn't see anything in the chat, but I thought I saw someone with their hand raised maybe, so there might be a question.
Tracy, it was me. I'm
Sure,
looking at
hi.
budget Hi, thank you so much for your expertise. I'm looking
Sure.
at budget adjustments and variance, and I'm new to this. Would a
Sure.
term, another term to be used would be delta?
Yeah, exactly.
Okay,
Yep.
because I see my guy uses delta, and I just want to make sure I was on the same page. Okay,
Yep.
that's it.
Yep, exactly. We're just looking for the difference, whether
Mhm.
it's variance, delta, whatever you want to call it, between your budget and your year to date. So a lot of times at different points throughout the year, I might share with our board and finance committee, we've raised 56% of our foundation budget. And I can tell that by having this variance number that just helps us see it clearly.
Okay, thank you.
And Tracy, there's a couple of questions. So Rebecca, I'm going to ask you to capture the questions. We're going to kind of continue on. But if we could kind of capture those, I know you're going to answer some of what's in there, but we'll just make sure that we do. And so as we transition from the capturing revenue and expenses, hoping that we are projecting more revenue than expenses. We know how that can go. Then utilizing the budget and how to utilize the budget and create it and put it together. And then once we are off and running for the year, right? We've got the budget approved, and now we are conducting business, and we will be generating reports, and presentations of these reports can happen in multiple places. But two key places is your board of directors is going to be getting a financial report when it meets. It's not uncommon for key staff or leadership staff to be presented with the budget on a regular basis as well. And so we're going to look at the statement of financial position. We just looked at a statement of activities. So we'll look at a statement of cash flows and functional expenses. We did pull a real life example for us to take a look at. And so we have that in your handout or your document that we shared. And so we're going to pull that up so you can see it as well. And so we're going to go right into those documents, and Tracy is going to walk us through those.
Yep. And so, Rebecca, yeah, you can click on audited financials there. We're going to start with the statement of financial position. So if you just scroll down, excuse me, a few pages. Okay, here we go.
What I will add to while Tracy is getting to her place there is that what we're going through are fundamental for the most part, to any nonprofit, regardless of the size. You can generate a budget, even if you have just what you might not consider a lot of money, but you still need to be tracking and documenting just the same. And so that's important to remember. The other thing I'll point out too, many of our nonprofit organizations are using the QuickBooks software so that it generates these documents for you. Tracy, I'm gonna pass it back to you.
Yep. Yep. Thanks so much, Dr. Palmer. So starting with the statement of financial position that Rebecca's sharing on your screen, this is also referred to as the balance sheet. This report is going to show you assets, which are what you own, liabilities, what you owe, and then net assets or equity. And those are all arranged in the order of liquidity. And by liquidity, we mean, how quickly they're available to the organization. So this statement's going to provide a snapshot of the overall financial health of the organization. And when we talk about, you'll see in here like current versus long-term. Current generally means that it's something within the next 12 months. So something that's coming up pretty quickly, whereas long-term is going to be, longer than that, beyond 12 months. So some examples of some assets here in this statement are cash and cash equivalents, which are things like your bank accounts, where you keep your money. Grants receivable, and so those are awards that are owed or expected to the organization. You may have prepaid expenses like you see here, and an example of that could be if you pay health insurance premiums for your employees, most of the time you're paying that 1 month in advance. So that's a prepaid expense that would show up here on your balance sheet. It's an asset. And then, of course, you'll have any property or equipment that the organization owns. And then, Rebecca, if you scroll down, the next section is going to show liabilities. So again, these are the things that you owe to various places. So some examples are accounts payable. So any bills that you receive that are due. Lease obligations, maybe your organization has an equipment lease like a copier, or if you rent your office space, you may have an office lease. Those are the things that will show up here. And whether they show up under current or long-term liability, again, is going to depend on the length of the lease for those pieces. A current long-term liability could also be a loan that your organization has. And then the next section is net assets. So net assets are essentially what's left if you sold all your assets, took everything that you owe, and you paid all your debts and liabilities. So net assets are total assets minus total liabilities. And then net assets for a lot of organizations you'll see are split into without donor restrictions and with donor restrictions. Excuse me. So if you're getting any grants that is specific for programs, then those would be assets that have donor restrictions. So you would see them in your with donor restrictions line on your balance sheet. Any general operating grants that you get or revenue that your organization brings in is going to be without donor restrictions. Let's just see if that's everything. This report also shows you the net assets that you have available to conduct your operations. What to look for on a statement of financial position is you want to look at your receivables. So what's the amount of money outside of your organization that's due to you, your comparison of assets to liabilities, and any big changes from year to year. A lot of these statements you'll see year-over-year comparisons. So the statement that Rebecca has pulled up now is the statement of activities, which is also referred to as the profit and loss or the income statement. The purpose of this statement is to provide detailed information about the organization's transactions and how those activities help further the mission through various initiatives and programs. It's going to show your revenue and expense over time, which is basically your cash coming in and your cash going out. And it categorizes these revenues and expenses that you'll see here. These should tie pretty closely back to your budget that you prepared for the year when you prepare your balance sheet. And again, because these are audited financial statements, we're looking at these after the fiscal year has been completed. So I'm not saying that the amount you have for individuals is going to match exactly with your budget. It's probably not going to, but your budget gave you an idea of how much would come in from individuals over the year. And this report is going to show you that. The expenses also tie back to your budget, but they're broken down by program or support service area. So Rebecca, if you scroll down just a little bit, oh, sorry, it's kind of right there in the middle. My apologies. So you'll see program services and then what's called general and administrative and then fundraising and development. So rather than seeing your expenses by line item on the statement of activities, you'll see them grouped by program service area. So this statement separates revenue also into with and without donor restrictions by the columns. Again, just a reminder, any restricted revenue must be used for a specific program or purpose. And so this will allow you to see your flexibility and funding. When earlier Dr. Palmer was talking about how general operating support allows you to be flexible in your decision making. And this is just one of the statements where you can see those dollars separated out. At the bottom, you'll see change in net assets, and that is just your expenses subtracted from your revenue. So basically, it's going to show you if you had enough revenue to cover your expenses for the year. The next statement, I think if you just scroll down to the next page, Rebecca, is going to be the statement of functional expense. And so this is going to show the functional classification of expenses. So we just mentioned it on the statement of activities. So you can see here that you've got your program services and then what's called supporting services, which again is that general admin, fundraising and development. And then in this case, this organization has some direct benefit to donors. And so this is where you can see by line item, by type of expense, how much expense went to each of these areas. This is going to be different for every organization. We get a question a lot of times about, how much should be program services versus support services. And it really does just depend on the organization. The line items here, like I said, align back to your budget and tie back to that statement of activities we were just looking at. Your program services expenses are going to include those expenses incurred to meet the mission of the organization through program services directly or indirectly. Where support services, often referred to as operating or overhead, maybe you've heard those terms, and the fundraising and development expenses, those are all considered the support services. So those are the things that every organization needs to be able to run. We're not going to get too much detail around this, but there are different ways to allocate expenses across some of those support services. You just want to ensure that it's a reasonable methodology for your organization. If your organization files a 990, which we'll talk about, and it should do some version of it, you may have to prepare a statement of functional expense for that tax return. So because of that reason, a lot of organizations also include it within their audited financial statements. I think next, Rebecca, so that's just a continuation of the statement of functional expense from the previous year for comparison purposes. And then the last one we're going to talk about is the statement of cash flow. So this statement is going to provide information regarding the cash flow that have been received from operations and investments. So it's going to summarize the movement of cash that has come in and out of the organization over the course of the year. So it's where did the money come from and how is it being spent? Like on some of the other reports, we've got the year-over-year comparisons just to see changes or deltas from one year over the other. Operating activities, just to talk about the different types or sections on this statement. Operating activities are going to include cash from operating programs and services, whereas the investment section is going to include activities that are related to things like the purchase or sale of assets or any loans that are made or received. And then financing activities are going to include any cash from financing, leases, credit cards, those sorts of things. And then at the bottom of this statement, you'll be able to see your change in cash year over year. I know that was quick, and just kind of hit the highlights of what to look for on these statements, what they're used for, their purpose, and more understanding of them. So I don't know, Dr. Palmer, if we want to allow for any questions or for Rebecca to keep sort of tracking them, and we can address them later. But if there's anything else you'd like to add.
Let's keep tracking them, and we can go to the gallery view now. So this first part of what we've covered is related to the reporting. And so once we have some consistency with our budgeting, with our reporting in terms of our financial activity, and then also determining what is it that we're going to share with our board of directors whenever we meet, because it's common practice that there's a report out during those board of directors meetings. Once we have established what our procedures are going to be and how we're actually going to engage in implementing those guidelines, yielding to those policies, creating that budget, and reporting out on the regular basis. At the end of our fiscal year, whatever you decided when your nonprofit was started, whatever fiscal year period, it could be a calendar year or it could be a different 12-month period of time, beginning and end. The Internal Revenue then expects us to complete what is called an IRS Form 990. If you Google that, it would pop right up and you could kind of see what that template looks like. There is a expectation that we're going to utilize all this reporting that we've been doing to actually complete that 990 form to then submit to the Internal Revenue. So that's one way that we are to report our financial activity once our fiscal year concludes. Another way is the annual report or the impact report. I'm seeing where a lot of our nonprofits have changed the name of the annual report, and now we're calling it an impact report. Whichever your preference is, but I do see that that has been a change. And we report that way. And then we also report a third way, which is our auditor's report. So there is the IRS Form 990, there is the annual report or impact report, and then there is the audit and auditor's report. Tracy shared the financial reports from an auditor's report. So that was for that year. That's where that information came from. It came out of the auditor's report. And so what we're going to do here is I want to just kind of ask, are there any questions, or are there any of us who you say to yourself, I do not know what an IRS 990 form is? Can I get just some, you've never seen one, you don't know what one is? Do I see? I don't see. Tracy, I don't see any hands up for that. Are there any of us who you've never seen an annual report, you don't know what an annual report is, you are not sure what we mean by impact? I don't see, Tracy, I don't see any hands there. Tonya has raised her hand.
I have a general knowledge. I guess I would say about the requirement for it, but I can't say that I've ever done one personally because we haven't produced enough funding to have that requirement.
Understood. What I will say, and Tracy, I'll let you chime in here. For the IRS Form 990, it is a booklet. It is literally a booklet. And it is a booklet that has the form that you fill out. And it also has instructions on how you fill out. It's just like your tax return, when you're filling out your personal tax return. Tracy, I'll let you comment on the Form 990. And Rebecca, you could just pop it up and just scroll through. Tracy, you don't have to go
Yeah.
through each point. But Rebecca, if you would just kind of show what that form looks like.
Yeah, and I'm just gonna, again, as Dr. Palmer said, it's a booklet. There are so many different schedules and attachments that go along with it. We're not gonna touch those, but just some general pieces of information about the 990. It is the organization's tax document that, as Dr. Palmer mentioned, it does have to be filed annually with the IRS, and it's due the 15th day of the 5th month after the close of the fiscal year. So if you are a July 1 to June 30 fiscal year, then your 990 would be due on November 15th, 5 months after, by the 15th day. There are different types of 990s. This is a standard form that we're showing you. There's also an EZ form and a 990N, which is a postcard. And which form your organization has to complete depends on your gross receipts for the year. And there are guidelines about that on the IRS's website. Back in 2019, I do want to mention that there was a mandate for certain versions of the 990 to be required to be filed electronically through an authorized e-file provider, which can be burdensome for nonprofits and even costly in some cases. So just be aware that there is an e-file requirement, and it has to be done through someone who has been approved by the IRS. 990s are also required to be open to public inspection. You all may be familiar with GuideStar or Candid, as it's called now. They will post nonprofits Form 990s. You need to provide it if it's requested. Various entities will look at a nonprofit's 990. It could be a donor, a funder, a partner. We also just put it on our website, so it's there for the general public to see and for transparency purposes. Because it's required and because it's out there for the public, one way that you can use your 990 is to tell your organization's story and its accomplishments. During the year, there's a section called Program Service Accomplishments, where you can, right here that Rebecca's showing, it continues on to a Schedule O, which is a general schedule. You can tell as much or as little about what your organization did during this fiscal year in this Form 990. So use it as a way to share your story. Your board should review this 990. Apologies, I'm at home and I have pets and they're deciding to bark. Your board should review your 990 prior to filing it. But as Dr. Palmer was saying, these numbers should filter in directly from some of the statements that we just looked at that you're going to be reporting on throughout the year. The main Form 990, just a few highlights. It includes summaries of financial information throughout the year. There's a checklist of required schedules. There's a section on tax compliance. There's a governance section, which includes questions about your board, your governing documents, your committees. There's a policy section, which asks about various policies like whistleblower, document retention and destruction, and compensation policies. So again, we could go into a lot of detail, but those are just the highlights and some important pieces about the 990 that we wanted to share with you all today.
So if you, and again, you know, the IRS Form 990, the annual report or the impact report and the audit, and which yields a auditor's report, is the reporting mechanisms that are commonly used. I will share with you that audits have a price tag because you're bringing in a professional service to do that for you. There's also a financial review that can be done internally to just kind of show that you've gone through a formal review of the way in which you've managed your finances for the year. So in terms of that, in terms of kind of what we have laid out specifically for managing our financial transactions, these are all kind of captured under that umbrella. There's a question around whether audits are required to, since I made that. Rebecca, I know you're capturing all those questions, but I did just kind of see that pop up. It is a best practice to engage in an audit if you are engaging in managing managing finances by way of your 501c3. That is an important process there. Now, for startup and grassroots nonprofit organizations, oftentimes they will engage in what's called a financial review, which can be done by a CPA, and can do a review, not necessarily a full audit, but they can go in and do a review, and that doesn't cost as much. So minimally, a financial review every year is expected. Let's see. The last thing related to our financial transactions in your handout, we have a link there for you, financial accounting standards. These come from the Financial Accounting Standards Board. These are generally accepted accounting principles. We're not proposing that you become an accountant. That's not what we're saying here. But it is important to have a sense of what happens as it relates to on the accounting side of the organization. And I will tell you, having run a significant sized nonprofit, when I was the CEO, one of the things that I would have to say each and every year, I learned something different in that. And so it took a minute, in order to really understand how the pieces fit together, not necessarily generating a report, but how the pieces fit together, and how studying over a period of time, over years, studying what your outcome is each year related to your finances helps to develop strategies on how to become more financially stable. And so that's something to understand. So we've got this resource here. Rebecca's showing you what it looks like in terms of that. If we could go to slide 19. Tracy, I don't know if there's anything you want to add as it relates to the financial transactions.
I don't think so. I think we covered a lot today, and as Dr. Palmer said, we're tracking your questions in the chat, and we'll circle back with you all on those.
The next slide, please. So the next part is what we've been talking about the entire time, the internal controls and audit. So an element of having internal controls is minimally, you have your guidelines and policies for how finances will be managed, that there is a review that is happening internally, and possibly if you have the capacity to do it, a financial review by a CPA or CPA firm. And then, of course, in your bylaws, there is mention. It doesn't give you a full manual, but there is mention as to how finances will be handled, in particular as it relates to the board of directors. Oftentimes for audits, there's an audit committee. And then, of course, there's a selection of a firm that actually helps nonprofits to engage in this particular task. Tracy, do you want to speak to the yellow book versus the single audit here?
Yeah, I can do that just quickly. So some of
Mhm.
you may be required to have yellow book or single audits, and that depends on the type of funding you receive, particularly if you get any federal or state funding. So a yellow book audit is required for a nonprofit if you receive $100,000 or more in grants from federal or state government, And auditors follow a special set of Yellow Book government auditing standards. They're a little bit more in-depth and intense in auditing and testing the organization. And then there's a single audit, and that's required if an organization receives federal awards of $750,000 or more during the fiscal year. It's an audit of both the organization's financial statements and compliance with federal award requirements for programs that are defined as major programs. So those are two audits that your organization may be required to have if you get federal or state funding.
And one of the things that I will say there too is that when you are applying for state and federal grants and or contract opportunities, it is important to be clear of what the expectations are, so that if your organization doesn't have the capacity to do what's expected, it may or may not be a grant opportunity for you at the moment. But you may want to enhance your capacity in terms of the infrastructure, the administrative infrastructure, as it relates to finances for your organization. The next part of our work is around diversification of revenue, which is really where we started. We started with the image. We started with, okay, what does this image tell us? What does it say to us? How does it speak to us? And we had, all types of dialogue about that and how we interpret what we see. We go back to this as we close out this particular section on financial management as it relates to diversification of revenue. So what are we really talking about? Number one, engage your nonprofit in fundraising as soon as you are able. I know that there are some of us that are on this call that started nonprofits from our kitchen table, and we continue to operate those nonprofits. We're going to talk about fundraising here in a minute, but fundraising hopefully will bring forth more unrestricted dollars than restricted dollars. If you have an opportunity for fee for services, we looked at YWCA, we heard about YMCA, the NC Center. Those are membership organizations. So a way in which they bring dollars in the door is through a membership fee. So that may very well be an option. But then also fee for services, which is different. Here, what we're saying is that we charge a fee for a person to participate in our programs and services. The YMCA example was we have after school, we have summer camps, we have swimming, they have all sorts of ways that they can charge a fee for their programs and services. However, many of our nonprofits are serving a population of individuals who may not be able to afford a fee for service. And in those cases, sometimes there's a sliding fee scale, or sometimes there is a way in which we raise money to offer scholarships for individuals to participate. But nonetheless, that is a way in which your portfolio could be established. Grants, contracts, investments, endowments, those are ways to diversify revenue. And so it is a journey. If I could say that again, it is a journey to work to the point where your portfolio and or the way in which your dollars come in is diversified, and diversified in a way that's going to help your nonprofit organization be sustainable and have some financial solvency long term. So it doesn't happen overnight. But what's fundamental is what we've shared with you today. Once you have these, prior to this slide, once you have all of those pieces in place, then it's probably time, it could yield a good time for you to begin to think about investments and endowments and looking at ways that you can grow your cash flow, or that you can establish a reserve. you know, out of the gate, if you're able to begin to put aside dollars to help you to be able to do that, by all means, sacrifice and do that. I think we heard that from Tina earlier. However, there are a variety of ways that you can get to that end goal. And so you want to work very closely with your board. You want to work very closely with your treasurer. You want to work very, very closely with them. And if you're fortunate enough to have a person on your staff in finance, then you're working very, very closely with that person. Tracy, I'm going to give you the last kind of word on financial management. And Rebecca, we can go back to the gallery for that. I'm going to give you the last word on just in particular what a journey this is for nonprofits.
Yeah, I can't agree with you enough, Dr. Palmer. And it is a constantly changing journey. So you know, you might find that after you've finally got your feet settled and you've got all these pieces in place and you're moving along, that something changes and you need to shift a little bit. And that's okay. Maybe you need to present something differently to your current board of directors. And so just be prepared to pivot some as well. And thank you so much for letting me join you all today. I know we went through a lot and it can be a lot to carry, especially with financial management and fundraising. But I appreciate you letting me join you all today.
Thank you. Thank you, Tracy. Rebecca, we'll work on that list. Did you have something, Lisa?
Well, two questions I think that I'd like Tracy to answer before she logs off and we can maybe
Okay.
take a little break before the next session. We've talked about the contingency funds for unexpected expenses and having reserves set aside. But a question about standardized chart of accounts, Tracy?
Yeah, and so for excuse me. If you use an accounting system, whether it be QuickBooks, I saw some people talking about Sage and other ones within the chat. A lot of those come built in with a chart of accounts that you can just use. Some of them you may not need it all. Others you will, and you still may create some new ones that are unique to your organization. So I think if you're using any sort of accounting system, there is going to be a standard chart of accounts that is built within that. I would say definitely use it, but just know that you may not use everything that is sort of populated. And it shouldn't show up in any financials you're preparing. And then if you need to add an account because it's something you want to track in particular, I would encourage you to do that as well.
For sure. And then one more question quickly is from Tina. I think it was talking about the different types of audit. She was asking, is that amount inclusive or exclusive of a match?
Yeah, and so the center doesn't get any federal or state funding, so we don't have to go through these yellow book and single audits. So I'm not an expert on that, but we can do a little bit of research on that. I think when you say a match, so if you get that funding and then you use it as a tool to raise additional funds through a match requirement, if that's included. So I wouldn't want to answer that without doing some more research, just because we don't, we don't experience that at the center. So I don't have a lot of background knowledge on that.
Okay, thank you. We're about to tip into this for our first time, so I just wanted to make sure I didn't
Yeah.
by anything.
Yeah.
That's great. If others of you have any information you'd like to share in those regards to that, just scroll up in the chat and add a little response there. But I think that covers the questions we had for, at least for now, for financial management. And we'll get to some of these other questions when we get into fundraising. Great. Well, thank you, Tracy. It was lovely to have you as
Yeah.
always. I hope that you can clear your throat and get over the cold. It's so pesky.
I know.
For you,
so
I'm sure.
apologize about that, but thank
No,
you
you're
all
fine.
for letting me be with you today.
Thank you. We'll let Tracy log off here. And then Dr. Palmer, what are your thoughts about a break before we dive into fundraising? I'm seeing some nods of
Yes.
heads.
I know, it gets to be that way at this particular part of this work. So it is 11:28, and so I am thinking 11:35. I know you'd like longer, but, I'm gonna give us, is that 7 minutes if I stop talking? So if we could come back at 11:35, that would be great. Thank you.
Perfect.
Thanks, everyone.
Back. I hope we are, um, I know that wasn't a long enough break, but, but I'm hoping you were able to at least take a 60-second, just kind of, stepping away from financial management to kind of clear our, thoughts, and clear our heads just a little bit to transition into fundraising, and thinking about that. You know, one of the things that's real important for us to keep in mind is that fundraising is about asking for money. I mean, it's about making the ask and coming up with a way, or defining, creating, developing a way in which your nonprofit is going to go about doing that. And it is not easy. You know, it takes time for us to just develop a fundraising program, if you will, to help us to be able to secure those unrestricted dollars. It takes consistency and frequency and consistency in the messaging and the asking. You know, we look at organizations sometimes, and we observe, you know, some 501c3s that are having annual fundraisers and raising $500,000 or raising $1 million, you know, a year. And trust and believe that did not happen overnight. It took some very consistent, intentional use of some strategies in order for nonprofits to be able to do that. And so it's not a snap of the finger and voila, we're able to, you know, raise dollars at these levels. So what I want to do today is share with you what we have provided in your workbook. And for the most part, we're going to stay right here in this gallery space, because I want to make sure that you have the content, and team will pay attention to the questions and try to infuse those as best we can in this part of our work. But again, it is frequent, consistent use of strategies, and being consistent and frequently messaging that we are in need of donations. Now, we know donations can come in the form of cash. But donations can also come in the form of other types of assets, like real estate, buildings, land, cars, trucks, you know, you name it. Those resources can come in a lot of different ways. So what we want to do is to leave you with those ways in which fundraising is framed, recognizing that the next step for your nonprofit is to create the master plan for how you're actually going to go about fundraising. So in your workbook on page 106, we start off with just a couple of nuggets here about what fundraising is not, and just kind of thinking about um, some ways to think about it. You may or may not agree, but these are some ways in which fundraising is framed. So as you look at this list, this idea of fundraising is a combination of things. It is a combination of the ask for what it is that we are in need of, but it's also building relationships and establishing a presence in our community where in our community, we are recognized and identified by our mission and identified by the work that we do. So when we're asking for those donations, we're asking for those donations to make the work happen or to move the mission and or vision along. It is about moving and generating and creating friends and creating supporters for our nonprofit organization. Again, there are some nuggets here. You might say to yourself, I don't agree with that 100%. But what we put these nuggets here for you to begin to understand what might be out in the atmosphere or what might be in your community, or in terms of when you're making the ask, in terms of how folks are thinking about fundraising. For a long time in the fundraising space, we talked about and we promoted, that fundraising is not about raising money, it's about raising friends, it's about establishing relationships, where it's about both. It is about both. It is about doing all of that. And as I mentioned before, it takes time. The other part, in terms of some of the pitfalls, page 108, some of the pitfalls that we sometimes see as it relates to fundraising is listed here for you. It is important to have a readiness to fundraise, And one of those elements of readiness is financial management, which is why we do it, first. It is important to be able to communicate how dollars come into your organization, how those dollars are going to be expended, what sources is it that you have that are bringing those dollars in, and being able to report out as to how sustainable or how solvent your nonprofit is. And so we want to make sure that we have that shored up as a part of being ready to fundraise. Are we budgeting? Are we reporting out to our board on a regular basis? Can we generate, and are we approving a budget? Those are the types of things that we want to make sure that we have in place as it relates to fundraising. Planning is another element. We talked about strategic planning last week. And it's not to say that we have to have and invest in a very comprehensive strategic plan, but minimally we should be able to share with the folks that we're asking for donations from, what are our primary goals? What kind of impact are we trying to make? And being able to report out about those things. And so understanding what fundraising means to your nonprofit, understanding how your nonprofit defines what fundraising is, and then understanding and identifying what strategies it is that you want to use or that you're going to use in order to fundraise. I'm going to pause here before we go to slide 24, Rebecca, but I want to pause here to see their questions so far. And notice I did state, what does fundraising mean to your nonprofit? What does it mean? What does it mean? What strategies are, and we're going to talk about strategies, but what does it mean? What does asking for a donation, how is that defined for your nonprofit? Recognizing that in the life cycle of your nonprofit, fundraising may look different depending upon where you are in that life cycle. So that's important. I didn't see any questions pop up there, so I'm going to continue. So if we could go to slide 24. So here is a kind of a fundamental way to frame fundraising in stages and building your capacity in stages. Fundraising stages, the way we have it structured here is formulated around 4 different stages: identification, cultivation, solicitation, and stewardship. So identification, cultivation, solicitation, and stewardship. And in your workbook, we're on page 109. Add number 4, stewardship, in your workbook, because when you get there, we noticed that was or so. So just make sure that you kind of have that. So what we want to do now is just kind of help you to understand what each of these stages mean. So we're going to start with identification. And again, we're on page 109. As far as identification, so identification is the process of determining, and it is the beginning of determining who are going to be our prospects. And so what we do here is we create or we generate a list of prospects that we want to ask for donations. Now, keep in mind, if your nonprofit has been in existence for a while, you may have a fairly solid donor database of individuals that have given in the past, and you're soliciting them each and every, how often you do it, right? But it is very common for us to add new prospects. And so having a prospect, a list and or donor base of prospects, and then also understanding who those prospects are by doing the research that we need to do in order to be able to create a way to ask them for a donation. So that's that whole identification part of it. The second stage is cultivation. So once we have the prospects, we want to move from prospects to new donors. We want to move from prospects to new donors. And in doing so, we are, if we've added new prospects and we have an existing donor base, then we are trying to move them from just being on a list to cultivating a relationship with them such that they give a donation for the first time. And then we want to continue to cultivate our existing donors. We want to continue to cultivate our existing donors. Once we have generated who these individuals are, or companies, or businesses, or other entities in our community, we want to capture and save that information in a donor base or database. And some examples of databases, I'm going to give you a list. So I'm going to make sure everybody's ready. Some donor database systems that are oftentimes used is Salesforce is one, and it's spelled just like it sounds. Bloomerang, Bloomerang, Bloomerang. Network for Good is another source. And Little Green Light is also another source. And these platforms will save information about your donors. Go back to the previous slide, Rebecca. The platform will save those donor names in that database system. And also, it will prompt and help us to communicate with that donor base. And so quite often, these systems are used to help nonprofits to do that. And now there's a cost. What I've learned recently is Little Green Light is a very affordable platform to use. There's a nonprofit organization that I'm working with. They've been around for 40 years, but they have not established a fundraising master plan, and they have begun to do that. And this Little Green Light was a platform that they decided to use, and seemingly it's more, and it can hold, larger. It can hold information for a larger a significantly large donor base as well, because you can purchase based on how much information you wanted to store or save. So that's in terms of thinking about the cultivation. And then you want to communicate with donors as it relates to cultivation. You want to communicate with donors. There's information on page 113 that I want you to go to. Let's see, 113, 114, and 115 is where we are with the cultivation points that we're making here. There are some things to think about when we are approaching people to ask them for a donation. Some people want to be recognized, some don't. So we want to make sure we identify where people are in that regard. Some organizations or individuals will give because a person that they know have inquired with them and told them about your organization, and they'll give for that reason. And then also paying attention to who actually gives to other efforts in your community. Oftentimes, if they are giving to a particular organization, they may also be open to hearing about giving to your organization and your efforts. The other thing to think about too is to involve your board in identifying prospects and your staff to kind of help to begin to build out a donor base and then ultimately creating a database. There are some rules of thumb to think about when you're cultivating and you are in particular prospecting. On page 114, we've got a donor bill of rights here in terms of thinking about philanthropy and when we are asking and securing donations. If we could go to the gallery view, that would be great. I do want us to kind of hone in on donor bill of rights. I want to pause here for a minute and just kind of inquire with the group as to, is there anything that you see noted here that you kind of ask yourself, you're not real clear about what we mean? So the important thing about when we're asking for donations, and Tracy shared some elements of financial management that might impact your ability to fundraise. One is how you manage your finances, and outwardly facing, what does that look like in your 990? What does that look like in your annual report or your impact report? And what does that look like in your audit? If you notice the example that we used, if you go to that website, you're going to see all of that information available to the public. I mean, it could be requested anyway. So it's a good practice to go ahead and post and show that information. I think that particular nonprofit went back about a decade. So they've got about a decade of audits, 990s, and their impact or annual reports. And it's available for any person to review, whether they're a particular donor, a particular funding opportunity through grants. It's available for folks to review. So keep in mind that we are 501c3s. Most of our organizations are. We're public charities. And so there's information that can be requested by the public as a result of us being a tax exempt organization as designated by the IRS. So this notion of the donor bill of rights should come pretty easy for us. If on the financial management side, we're doing all the things that we are expected to do to communicate our financial activity. I'm going to pause here because I want to kind of pick up on thought here, Rebecca, and any questions at this point. I don't see any questions or initial reaction. We're at cultivation, 4 stages. Identification, cultivation is where we are. Relationship building, raising money, securing donations is where we are in terms of what we're talking about here as it relates to fundraising and engaging in fundraising. Okay. Want to proceed to solicitation, which we've touched on that already. So solicitation is making the ask and determining who we're going to ask, but how we're going to go about asking for a donation. And we reference the People Rules of Fundraising, page 113, and then also the Donor Bill of Rights. And so solicitation is the third stage of fundraising, actually making the ask and then establishing a relationship and building rapport and ongoing relationship with our donor base is where we are here. Solicitation. Can you all hear me okay? Okay, good. Good. So in terms of an example that we provided here or something for you to think about is the annual campaign. How many of you, your nonprofit engages in like an annual appeal, an annual ask? Do a thumbs up or give me some idea. How many of you every year, like clockwork, you're doing an appeal or an ask for donations, whether you're sending out a letter to all of your prospects and or existing donors, but you're doing that. How many of you, so there's a suggestion. How many of you are, you have an annual fundraising event? Like every year, like clockwork, you do an annual event. And okay, all right. I see hands raised. Some of you do two, some of you do more than one. So fundamentally, we should be be building a donor base. We should be prospecting and we should be asking for donations. That is a benefit of being a 501c3 public charity. And so we should be doing that. Many nonprofit organizations have multiple ways in which their fundraising happens. And you grow to that. You grow to that. What's important to think about is your budget. Remember, Tracy talked to us about a budget. So when we look at our budget, there's a place there for revenue. So whatever we're doing on the side of fundraising is considered revenue, is considered dollars coming to our into our organization. And so we want to definitely be thinking about how to go about doing that. On page 118, in terms of a worksheet that we've provided for you. When you look at page 118, notice we've got the stages, stage 1, 2, 3, 4. And we've got different types of fundraising that you could possibly tap into. You could, if you have an established donor base, and or you could be creating that donor base, we would identify who those folks are, cultivate, solicit, steward, right, for the donor base. Let's say we decided we were going to send a direct mail. We don't see as much of that. We still see it, but we're starting to see more of the social media platforms are being used for making those asks. And so what does that look like in terms of identification for direct mail? What could that look like in terms of cultivation, solicitation, and then stewardship of those those gifts. And then we could do personal solicitation, we could do special events, we could engage in securing dollars from corporations and businesses. Some of our organizations have capital campaigns when we're trying to do something like renovate a building or build a building or acquire some significantly priced asset. And then some of our nonprofits are engaged in plan giving. So we are seeking out individuals who may want to leave us a gift upon their passing. So that is a way also to fundraise. And so again, these four stages. Stewardship is the next stage. And Rebecca, we can go to slide 28 here. Notice that we put in your workbook on page 117, we put ways that you might thank and show appreciation for giving. And so that's on page 117. And then we also, again, like I said, we had the worksheet for the stages of fundraising, but stewardship. Once we get the dollars, it's important for us to financial management, right? We're going back to that. It's important for us to have in place a way to manage those funds. And we might even have in place kind of giving guidelines, which is inward facing. It's inward facing in terms of what will be our giving guidelines, how will we set up giving opportunities, and how will we communicate back giving guidelines? How will we communicate back to our donors? Oftentimes it's built into our overall fundraising program. And then for those donors who approve, there may be some donor recognition as it relates to stewardship, to show that appreciation and to thank them for their gift. So again, 4 stages of the overall fundraising in general. Donor communication. So in terms of thinking about communicating with our donors, we can go on to the next slide. Advertising and marketing, and then the different stakeholders. So social media is such an affordable way to communicate with stakeholders. In the event that a lot of your stakeholders or donors are using social media. So we should be paying attention to the analytics of our social media platforms and making sure we understand what type of impact or what type of reach we're able to garner using social media platforms. And then, of course, the traditional methods that we've advertised with as it relates to getting the word out and communicating with our donors. The donor database systems are designed to help us advertise and market to the names and the donors that are in that system, that we've put in that system. So when we're putting information about donors in our data system, that system, the platforms are designed to help us to be able to have or use techniques and strategies to communicate with our donors. So if we could go back to gallery, I want to pause here for just a minute. Identification, cultivation, solicitation, stewardship. And that's going to look different from nonprofit to nonprofit. Now, there may be some ways in which we go about doing this that are similar, but it is going to be a different plan. And I keep saying this, what is your master plan for fundraising? Fundraising should be designed in a way where you have a strategy that you are putting in place. And you're utilizing these options in terms of ways to fundraise. That's back on page 118. These are some different types and ways of fundraising to think about in that regard. The last thing that we want to talk about is we have to talk about. It's like we have to bring up donor giving and the pyramid of giving. Go to page. This is like one of my favorite handouts. And oftentimes when we're training and we're able to distribute the information that you see on page 120, and I'm going over to 122. I always like to do those 2 pages front and back, because on the one side, we have the pyramid of giving, which is a common practice in terms of framing how we think about giving and donors giving. This is a very common way that nonprofits, I should say traditional. This is pretty traditional in terms of what you see here. Many of your nonprofits do fundraising in this way in terms of trying to touch a donor such that they give to your nonprofit. But I always like to put page 120 and 122 together, like front and back. I always like to do that. When you look at page 120, and Rebecca, I don't know if you can show that page. Can you show that page? Donor giving is what we're talking about. And there's a little bit of a theory to this. And so if I could remind some of you and maybe share with some of you for the first time. So the pyramid of giving, this is a framing that we have used my whole career as it relates. I don't ever remember not referencing the pyramid of giving when it comes to fundraising. And the idea is that our nonprofit evolves, that it evolves from annual giving to major giving to estate giving. That's kind of the way in which we think about it. And we should be trying to establish a foundation of annually asking for individuals to give. And these are some examples of how we go about doing that. The fundamental part of all 3 of these giving options is donor base. Establishing a donor base and creating a place to store the information about donors. And so we want to develop a routine in terms of frequency and consistency of annual giving, which is why I posed the question. How many of your nonprofits how many of your nonprofits do an annual appeal? And how many of your nonprofits do an annual event? Oftentimes those go hand in hand. But you could very well do an annual appeal letter, let's just say, and send that appeal letter out to all 1,000, let's say, if that's your donor base. And at the same time, you can invite them to come to a event that you're doing to actually raise dollars. Also with annual giving, it could be a personal solicitation from a stakeholder or friend of your nonprofit. So let's say you've got 20 new prospects. You might ask your board members, hey, do any of you know any of these folks? And if you do you mind helping us make an ask? So those personal solicitations happen in the annual giving space. And then of course, direct mail. And as I mentioned before, special events. Major giving. Oftentimes what we suggest is that build out a annual giving apparatus, get some traction with that, and then pursue capital campaigns and approach foundations and approach corporations for a major gift. Because that could be added on to what you're acquiring as it relates to annual giving. And then, of course, estate giving. That the folks that have been giving and supporting your nonprofit, think of your nonprofit organization in their absence. And so this is what we consider the pyramid of giving, and we just continue to build. We continue to build upon that. If I could get you to turn to, and Rebecca, we're going to go back to slide. No, let's stay here. Let's go to page 119. So let's just do a real quick pop quiz. Can we do that? A quick pop quiz. Identify in terms of what we just discussed. Identifying, and you can kind of do this there in your space. And again, this is on page 119. How many giving programs, and we can use the chat if we'd like. How many giving programs did we talk about? How many giving programs? Eight? How many giving programs or giving opportunities? Three. Thank you, team. Thank you, everybody in the group. So 3, we said annual, right? Annual, major, and estate. So those are our 3. So it was 3, and those were the names. So let's talk about the 3 different types of programs, and let's do a match. Let's do donor type. So donor type is habitual, impulse, and thoughtful, right? So the habitual donor, the impulse donor, the thoughtful donor. Match up which of the donor types go with the different giving programs. What would you say as far as the donor type habitual, which giving program would you say? Would you say annual? Would you say major, or would you say estate? The habitual donor. So I give out a habit. I've been giving a while. Annual, okay. Okay. So giving out of habit, so it would be good maybe for you to approach me for a annual gift. I like Michael's, all 3, because if I've given and I'm given routinely, then I may very well give major, and I may very well give to your in an estate fashion. So that's good. And then for the impulse donor, which program might you reach out to me about? If I've never given to your organization before, you're asking me for the first time. So this would be the impulse donor, is that they've never given before. And they're reaching out and you're reaching out to them for the first time. I don't see as many responses to that one. Okay, 1 and 2. So I see maybe the annual giving, maybe the major giving. Oftentimes, if we're dealing with a prospect and they've not given before, oftentimes we start them with an initial ask. Maybe they give to the annual giving program, but it is not uncommon to identify a new prospect for a major gift, especially if we've done our homework. And so that's a way to think about that. What about the thoughtful donor? Where might we, this individual has given on a regular basis, and they are typically really, really bought into what we do and how we work. And I see some that say estate in the chat, and I think I might have even seen annual in the chat. So here's what I say. Every nonprofit is different. The framing is annual giving, major giving, estate giving. And Our task is to create a master plan for how we want to approach giving for our nonprofit organization. Let's go back to the gallery view. What does the pyramid symbolize, you think? Again, this is age old, like this particular theoretical frame, if I could call it, that we put to practice. It has been around for quite some time. What do you think? What does it does it remind you of anything? And maybe is a way to think about that. Majority donations to least donations, okay? In terms of thinking about giving and how we build out our program. Think about it like this too. Our master plan could very well have annual giving strategies, major giving strategies, and estate giving strategies, right? So our master plan could very well have elements of all three of those. Now, it is not uncommon for us to have a focus, however. You know, for 2 or 3 years, your master plan might be all about annual giving. Or for a year, your master plan might be about a capital campaign. It just depends on kind of what you've got going on. And remember what Tracy shared with us. What is your budget? Where are your dollars coming from? And how is fundraising going to help you to obtain the revenue that you need to meet those expenses that you have laid out in that budget? Remember, financial management and fundraising should be communicating. There should be communication happening to understand where we are with both of those. I'm going to pause here just for any kind of thoughts around pages 120 through 124. We added a sheet there, the characteristics of a successful fundraiser, just to kind of give you some nuggets there about how to shore up skills as it relates to that. I don't see any responses there, Rebecca, in terms of, and again, just fundamentally, the stages of fundraising and the pyramid of giving, those are just two very I say fundamentals to any fundraising plan that you're putting together. That those are two things that you want to think about. I don't want to leave out grant writing, and I don't want to leave out earned revenue. Grant writing, for my perspective, grant writing is its own separate thing that we do. Fundraising is a different way of interfacing and interacting with potential givers. As opposed to what we do when we actually write grants, although grants can definitely help impact the bottom line. And then earned revenue is another kind of fund development, FUND, fund development strategy. Some of our organizations can generate earned revenue because we have something to sell, SELL. We rent out space. Anybody like Girl Scout cookies? That is earned revenue. It comes by way of being a part of a program, but it, in essence, brings dollars into organizations. So fund development. And when we are trying to bring funds into our nonprofit organization, keep in mind that it could be staff, it could be the board, it could be volunteers, it could be a consultant. So or a combination that comes together to say, hey, we're going to put together a master plan for fundraising. That's important to keep in mind. Again, who do we bring to the table if we're going to create this master plan for fund development, FUND, to bring funds into our organization? Staff, if we're fortunate enough to have staff, a board of directors, volunteers, and in some cases, organizations will bring on a consultant. But again, what is our capacity? what is our capacity as it relates to fundraising? I'm going back to our capacity assessment results that we, when we started the Institute, you shared in your feedback, just kind of where we needed to spend time. One was consider new income sources that you might want to be thinking about. If you go back to financial management, where we looked at diversifying the revenue, that is a place to begin thinking about new income sources. Nothing beats maintaining a giving relationship with your donor base. That was another area that we focused on in our results, and setting up a donor database to maintain records. And here's what I say a lot of times when it comes to fundraising. If we are not operationalizing that prospect list, and we are not operationalizing our donor database, chances are we're not going to get donations in. So it's important for us to craft a way for us to begin to ask for those donations as it relates to bringing dollars into a 501c3 organization, and communicating with individuals that give. Getting to know our donors is very, very important, and keeping up with our donors appropriately, as they would deem appropriate, not as we would deem appropriate, but making sure that the way that we engage with our donors is appropriate. I just want to give space for, I'm trying to capture this question, Rebecca, in the chat as we kind of bring this to a close.
Mhm. Which one? The one from,
It was one
Carolyn?
about, yes, I think it was one about, let me see.
will you talk
Uh,
about raising funds and programs with other nonprofit collaborations? Please discuss what is typical in nonprofit arena. It's a good question.
Okay. All right, I'm trying to see it too, because sometimes when they're long, when I say long, I mean long for the chat. It's hard for me to kind of capture it. Can you say it again? I can't get
Sure.
it.
Will you talk about raising funds and programs with other nonprofit collaborations? Please discuss what is typical in the nonprofit arena.
The word typical is where I get a little, there is no typical, is what I would say at the onset. But what I will say is that if you're going to partner or collaborate with another program, i.e. another 501c3, to raise money, I would just say be real clear about the distribution of those dollars. And you could actually use the stages as a frame. So you could say to that partner or to that collaborator, how are we going to identify who we're asking? How are we going to cultivate or till the soil for the ask? How are we going to solicit, and how are we going to steward? You could use that frame to kind of guide whatever that agreement is. And I do think it's important to have a formal agreement. If that's what you're, if you choose that option. And the other thing too is that in a lot of your grant applications, a lot of your funders will ask that. They will ask, how are you collaborating or partnering with other programs to address poverty or to address homelessness or to, so we do see that in grant applications in particular. Because if it's a foundation, several organizations are applying for the same funding. And so they may be curious and want to know. But you could definitely use that frame as a starting place to guide. But typical way, really partnering and collaborating in the space of fundraising is all about relationships that you have established. Trust is there. It's a good match for your organization. You know, those would be the kinds of things that I would be thinking about. But you could land in, you know, you might have one fundraising endeavor with a particular program that you got with program A, and it be mapped out one way, and then you have program B over here, you do the same and it's mapped out a different way. So you want to be mindful of who's going to manage that and who's going to oversee, making sure you're getting what you were promised in the agreement. So that's important. Any other questions that I see there? I don't see any. I think we're good. So
Yep.
give me
Okay.
temperature gauge, pulse check here. Today it was all about financial management and fundraising. Give me some idea. Right now you're feeling and or thinking what? Where are we? We have one more session to go. Where are we? Right now you're thinking, right now you're feeling what?
Carolyn said clearer. Jay said inspired. On track. Oh, I know more than I thought. That's always a good feeling. More of that. I started my career in development, so the session was comfort zone, excited, like I have a good handle on things. That's good.
That is good.
Like we have a plan. Question from Ruben. Can you share your thoughts on restricted funding being more prevalent these days compared to unrestricted funding?
I would say restricted funding is more prevalent for nonprofits, period. I mean, when folks contact me and say, hey, I want to start a nonprofit, you know, the next thing they say, so I can write grants. So, and immediately it's like, well, you're going to start your nonprofit with restricted dollars. And so I would say it continues to be, you know, when I'm asked to help with applying for the 501c3, I have a heart for this. I have a passion for this. I want to change the world. And I'm going to get grants to do it. That's kind of where it goes. And then I start talking about fundraising because I know that grants are great and that's good, but there's a need for fundraising. I hope that helps you out. We need more unrestricted dollars, and we really need to be thinking about to scale. Sometimes as nonprofits, we try to do more than we have the capacity to do. And if we can only raise 200,000, then that's the scale. That's how much we can do. And so it's important that, and you've heard me say that about 10 times today, scaling our programs and our services to align with our capacity, very important. Did I miss anything in there, Becca? I went a little beyond what I was asked, but.
No, that's really good. Thank you, Dr. Palmer.
Okay.
Do you want me to close us out?
Yes, absolutely.
Got just a couple minutes left. I'm gonna share my screen, so it'll keep me on task. So just wanted to share with you all a couple of updates. Our closing for today's session, you know, I'll send the survey link to you all, which we appreciate you all completing. There was a question about Smart Start and Canva checkboxes. That just helps us to aggregate and isolate responses from those groups that are either grant funded or part of a group membership. So if you see those and it doesn't pertain to you, you can just skip along, but it's a valid question concerning those two checkboxes on the evaluation. I did want to mention, because today's session was on fundraising and financial management, we do have two upcoming fundraisers with Funding for Good, one on May 15th and one on May 22nd. It's part of a series. If you all do any direct mail appeals, it's a great one to attend. And I'll put the chat for the calendar page in there if you're interested in learning more about those or signing up. They are free for members to attend, so you just have to make sure you register, so that's in there. And then next week, hard to believe it, but it's our final session. We'll be covering human resources and graduation. I did want to mention that there were a new Department of Labor overtime ruling that came out. We plan to have a webinar to discuss those as it relates to our human resources topic. So hopefully next week we'll have those dates for you. We'll have one in May and one in June to kind of go over those new rules for overtime for staff and employees. And then few notes just as we close up about graduation prep. We will spend half of the session doing our human resources topic, and then about 30 minutes of the session, our final 30 minutes from 12 to 12:30 will be our graduation. We do a virtual graduation. We invite you to change your Zoom background. We'll send you a link in the wraparound to change it to something that's festive for graduation. And then I want to make sure that you all confirm your mailing address with me if it has changed. Since you registered for the course, please let us know what your mailing address should be so we know where to send your certificate and class photo. And then finally, we compiled together a graduation video, and it comes from this online company called Montage. And so what you'll get is an invitation from that website. It's called Montage. .ca, I think they're based in Canada. And it will invite you to respond to a prompt or two and to record yourself sort of giving some well wishes or what you've learned in this course and what you're going to take with you. And it's a great way for us to help hear from you all about what this course has meant to you and what wishes you're sending to your fellow classmates. And, thanks to Dr. Palmer and everybody involved and that sort of thing. So it's a very good feel good thing. It is not required. It is optional. So if you're not interested in participating, that's fine. But I'll be sending that out. If not today, then tomorrow, those links will go out from Montage and you'll have a few days to respond. I do need all responses by Monday at noon so that I can compile them all in the app and prepare that for Tuesday's, our final session. And then the final things are just a note about all the member benefits that pertain to today's topic. You'll find a link in the wraparound that has a link to some of these member benefits that we list here that we like for you all to pay attention to. And if you need extra resources or support, this is a great way to do that if you're a member. If you're not a member, consider joining so you can have access to all these additional resources. But with that, I wanted to say thanks for joining today. Thanks to Tracy for joining us for the beginning and Dr. Palmer for leading us through all this material. It's been a lot and you all hung in there really well. So we'll look forward to seeing you all next week. Thanks for joining. Take care.
Thank you.
Bye, everyone.